What is next for Apple stock after its recent earnings pullback? Looking at the daily chart of Apple, AAPL hit a major resistance level near its all-time high zone around $340 before pulling back. Despite reporting strong revenue, cautious guidance and margin pressures contributed to a short-term sell-off. This post-earnings reaction pushed the relative strength index down from overbought levels above 70 toward neutral territory. Looking at the broader chart structure, Apple remains positioned inside an ascending channel, with the key horizontal demand and support zone sitting between $275 and $285. When large-cap stocks pull back toward primary demand zones, chart analysts monitor these levels for potential stabilization, rather than attempting to pinpoint exact market bottoms. Many investors utilize structured strategies like dollar-cost averaging, allocating capital at set intervals to manage volatility over time. Dollar-cost averaging helps reduce emotional decision-making during market dips by smoothing out entry prices across fluctuating price swings. By spreading out purchases over time rather than deploying capital all at once, market participants can better navigate short-term quarterly noise. Historically, studying long-term macro channel trends and fundamental revenue growth allows traders to evaluate risk and identify key accumulation structures across changing market cycles. Holding above key support keeps Apple's macro ascending channel intact. Watch for RSI stabilization near demand for a potential technical bounce. Subscribe for daily stock chart analysis. Disclaimer: educational content only, not financial advice. Always conduct independent research.